Co-founder from Bespoke Investment Group joins the conversation. Paul, what do you think? Should buy the dip? We got some real dip buying in last week, and now with oil prices surging anew, Treasury yields falling, signaling potentially slower growth ahead. What does an equity investor do?
Yeah, so I think, Sarah, what you said, you just summed it up in the beginning, wild swings, and that's what we've been seeing all year, for that matter. NASDAQ 100, 1% intraday moves every day this year. I mean, that's the longest since April 2020. Today was the first day, actually, since February 18th, where the NASDAQ 100 wasn't up and down 0.5% at some point during the trading day. So we've had these wild swings, and rather than make a stand, I think investors, rather than make a stand, use some of these extreme opportunities, these extreme moves to take advantage of some opportunities. And so, like, what you've seen now in the last couple of days or in the last couple of weeks is energy and defense stocks have really gotten ahead of themselves. Those may be areas where you want to lighten up or not chase. And then on the other side of the spectrum, you have the semiconductors, which you were talking about in your right before the closing bell. And despite the weakness today, down over 3%, the semis have actually, on a relative basis, haven't made a lower low versus their January low. And when you look at the relative strength of the semis, it tends to lead the S&P very well. Back in January, when the S&P made a new high, the semis' relative strength didn't confirm that high. And so we're sort of seeing the opposite play out right now. And as long as that pattern holds out, I think the semis, you could use this weakness as an opportunity here.